Hello, hello. So I'm gonna be doing this video for you, Mr. Tiger. Yeah, my name is Joseph. I'm originally from Zambia, but I'm staying here in Botswana. I've been here for 10 years. Yeah, I've been staying here for 10 years, and right now I'm living in Pikwe. I'm living in Pikwe, and what I can say is, according to my knowledge of trading, according to my experience of many years of practice. Usually, I've been doing my trading on demo accounts. Why I've been doing my trading on demo accounts is because I don't have a source of funds. I'm not working, I don't have any money, and most of my trading I've been doing it on demo accounts, especially Forex. Binary options, I was doing it just to earn money there and there, just on the side, just fast money. But in terms of Forex, most of my practices have been on demo accounts. But even though I've been practicing on the demo accounts, I've been taking it as a serious account. I've been taking it like a real account. And I believe the knowledge that I have is knowledge that can take someone somewhere. It's the knowledge that can take companies somewhere. It's the knowledge that can make you look at Forex in a different way. Yes, I've gone through a lot of strategies, a number of strategies. I've gone through the market makers method of trading, moving averages, all the strategies. I have gone through them, I have tested them. But one thing that I noticed, and the secret that I noticed, that many people are not noticing in the Forex industry, is the secret behind Forex. The time frame that you trade in is the most important aspect of trading. If you want to consistently make money in trading, not small money, but big money, money that can change lives, I really advise people to trade on the daily chart. I do not trade the 50-minute chart. I do not trade the 30 minutes chart. I do not trade the 1 hour. I do not trade the 4 hour chart. But I base my analysis on the daily chart. Because what I have learned is that the higher the time frame, the more accuracy. And what I have learned is that all these smaller time frames, they are backed by the higher time frames, weekly, monthly, and daily. But for my trading, for my personal trading, I concentrate on the daily chart. I concentrate on the daily chart, and that's what I trade. So, enough of the talking. I'm gonna go into the strategy and what I do. Because if I continue talking, trying to tell you how much knowledge I have, because I respect you so much and you have a lot of knowledge and you are a good trader. But what I want is just I want to bring in something new on the table, and I want you to look at trading in a different view. So I'm not going to talk about so many things. I just want to go straight to the point. I want to go straight to the point and just show you what I have. Show you what I have and guarantee you that what I have will make you money as long as you have money. Yeah, me, I don't have money, yes, and that is true. Even where I'm living, you can come, you can be able to see for yourself. But really, I know and I believe that one day God is going to bless me. I'm going to have money and I'm going to use my skills to make money for myself and for my family. And I know this connection that God has done for me to know you, it's a divine connection. It's not just a natural connection. So I'm going to begin now. So I'm just going to pick some random currencies, some of the currencies I love. Okay, let me take the GBP USD. Let me load it. Then let me take the USD JPY. And then let me take the US dollar South African rands. And okay, let me take the gold XAU US dollar. Gold against the US dollar. So this is how I start. Let me try to open them. Okay, USDs are okay. So this is how I start trading. So I have made a template. So this template it's got indicators. So these indicators, the way I use them, for me, they are very powerful indicators. And I'm going to show you the whole process that I use. I have the template, but I'm just going to load everything. So one thing that I do, I trade on the daily chart. This is the US dollar South African rands. I'm going to skip to the daily chart. This is a daily chart. And then what happens is this. I don't use candles. I don't use normal candles to trade. I don't use them. I use Heikin Ashi candles. And I'm going to tell you the reason why I'm using the Heikin Ashi candles. Heikin Ashi candles, I think you know about them. They are Japanese candles and they are average candles. They are not like normal candles. The way normal candles open and close is different. It's different from the way the Heikin Ashi pens. So what I usually do is I load the Heikin Ashi first. I go to insert, indicators, custom, and I load the Heikin Ashi. Okay. Then I have to remove these candles in the background, the normal candles. So I'll just go to charts. Okay, I'll just go to charts. Then I'll go to properties. Then common, line chart, colors, line graph, none. Okay. So now I don't have those normal candles in the background. These are Heikin Ashi candles and these are daily candles. They are on the daily chart. So one thing why I like Heikin Ashi candles is that they take away the noise out of the market. They represent the market in a more better, understandable way. Like they paint the market in a more better way for you to understand what's happening. Yeah, so the white ones here is showing the market is going up, red ones showing the market is falling down. Those are the Heikin Ashi candles. So there's one thing that I usually tell people. I tell people that Forex, it's not like we have a crystal ball to predict where the market is gonna go. No, it's not about that. I tell people that Forex is like a map. A map is something that you follow. So the market is something that you follow. The market goes wherever it wants to go. There are only two directions. There's up and down. There's no sideways or in the wall or somewhere where the market only moves up and it moves down. So I tell people there are only two directions in Forex. And for you to know where the market is going, the market itself must give you an hint. The market will tell you where it is going if you know how to read the market, because the market is like a pattern, it's like a structure that you have to know how to read it. You have to know how to read it. That's the market. So these are Heikin Ashi candles. I'm going to remove these grid lines. I'm going to press Ctrl G. Okay, my chart is clean. And the next indicator that I use, Heikin Ashi itself is an indicator. I know there are candles, but it's an indicator on its own. It's a very powerful indicator. So the next indicator that I use is called the MBFX timing. MBFX timing. Here it is. So let me just change the colors. I agree we've got green, yellow, and like orange. This one I'm gonna make it red. This one I'm gonna make it red. Let me see what happens. Okay. So we've got green, yellow, and red. There are two colors here. So this MBFX timing indicator, it's by Mustafa Baikite. Mustafa Baikite is a very, very powerful Forex trader. He's been trading for 27 years. This is not my indicator. This is for Mustafa. So RefWayne has the same indicator. If you have heard of RefWayne in South Africa, he has the same type of indicator, but all he did is change the colors. Although he's been telling people saying he programmed it, his is written AFI stochastic. For RefWayne, it's written AFI stochastic, but it's the same as this one. It's the same as this one. Why am I saying it's the same? I'm gonna go to RefWayne's one. I have RefWayne's one, AFI stochastic. You see? AFI stochastic. This is reference AFI stochastic. There's no difference. Let me just change the color here so that you can see that there's no difference and make it red. What's the difference between this stochastic and this one? There's no difference. These stochastics are the same. They are the same. So Refwin told people that he coded this one, the AFI stochastic. He did not code it. He just changed the names. It's the same stochastic. Everything is the same. This one is a product of Refwin, but there's nothing that has changed. So let me just delete it. So we have the MBFX timing, which is a stochastic indicator. Then I'm going to add another indicator, which I call the channel surfer. Okay. So the channel surfer, it measures dynamic support and resistance. So it measures dynamic support and resistance. It moves with the price. So wherever there's support and resistance along the way, it measures those points, potential reversal points for price. That's the channel surfer. It's for support and resistance. But we also have what we call the real support and resistance, whereby you can draw it yourself. You can draw lines. Apart from the dynamic support and resistance, I also use price action. I also use support and resistance for me to pick the best trades. So these are the indicators that I use. Firstly, these are the indicators that I use. But to make things quicker or to make things short, I will just load the template, the full template, so that you can see. So the full template, it comes from the MBFX system by Mustafa. That's a full system. So I usually tweak it for it to be the way I want it to be. So I'm going to load the MBFX version 2. This is a full system. So what I usually do is this. I usually change the candles. I love this system because it draws support and resistance for you. It draws the points. It also gives you some arrow signals. These arrow signals on the daily chart, they are very, very accurate. Of course, arrows repent, but on the smaller time frames, 1 hour, 30 minutes, you find that the arrow will be moving from candle to candle based on how the market is behaving. But you find that if there was an arrow on the daily chart, usually it doesn't move a lot. It can move once or twice, but it's a very strong indication that the market is going to change. So the arrow on the daily chart, for me, it's 95% accurate or more. It just depends. I can not be sure how accurate it is, but when an arrow comes out, it's very accurate, especially on the daily chart. So usually what I do is that let me go to charts, let me go to insert indicators, let me add those Aiki candles. Those are the ones I use. Those are the ones I love using. Let me add them. So let me remove the candles in the background. Properties, common, line chart, colors, underline graph, none. These are the steps. Okay. So now I have what? I have the Aiki candles. Okay. I have the Aiki candles there. Okay. Okay. Wait. There, I have the Aiki candles, and let me add the channel surfer. Let me add the channel surfer. Here's the channel surfer. These blue lines, and then let me change colors of this indicator. Because what I like this one. I like it to be green, and this one I like making it yellow. Okay. So this is the way my screen looks like. I usually have the Aiki candles. the channel cipher, and the MBFX timing, which is a stochastic indicator. Yeah, this is how my screen looks like every time I'm trading. So now here's the secret, and it's gonna be very short and easy. If a new Lamborghini came out right now, of course, who's gonna be the first person to buy it? The first person to buy it, of course, will be the rich people. The rich people are the ones who are gonna buy that Lamborghini first. So when the rich people buy that Lamborghini, what are they doing? They are causing the price to rise. The demand for that will rise. So the price will go up. So you find that when the Lamborghini is being bought, there's a time whereby the Lamborghini has been bought so many times, and there's no more buying that is going to take place. The Lamborghini has been bought and there's no buying that is taking place anymore. What happens to the price when that happens? The price falls for that Lamborghini because a lot of it has been bought and people are no longer buying. So it's exhausted. So price always reaches points whereby it's exhausted, and no matter what, it is bound to fall. It's just a matter of time and a matter of patience. I always tell people that Forex is a matter of patience. If you want to make a lot of money, you must be patient. I am telling you, people are not patient. They end up achieving nothing the whole year. They end up achieving nothing. They end up losing their money eventually. But people who are patient will always make money in Forex. Because what I want to show you is the psychology behind the daily chart. Big banks, investment companies, hedge funds in the world, they are using the daily chart to fool you guys on the 1 hour and 30 minutes. They are using the daily chart. One thing I want you to understand is that if you can master your entry on the daily chart, everything else doesn't matter. If your entry is very good, whatever happens in between, whatever news, whatever happens in the market can never affect you. You will still make money at the end of the day and you will make a lot of money. And I usually tell people that when you're trading on the daily chart, yeah, you must have a good account balance. At the same time, you cannot be risking 2%. Saying money management, I don't usually follow money management on the daily chart because I know that my strategy is very accurate. I usually trade at a bigger lot size, looking at my account size. And I'm going to show you how I measure how to trade with a certain lot size. I'm going to show you how I measure that. I'm going to show you everything, how I measure that. But on the daily chart, I want people who can risk because this is money. If someone has money, I always wish to God, I always pray to God that, if I had this money that people have, I would be making a lot of money in Forex. And I always pray to God to connect me to people that will help me and that I will work with and that also I will help so that I can take them somewhere. That is my prayer. So, what I'm about to show you now is what I do. My concept is very easy. It's a concept that has been known for many years, but people do not really understand it. When it comes to practicalizing the concept, people cannot practicalize it, but it's been there for a long time. They always say sell high and buy low. That is all I ever do. I sell high and I buy low, and it works very, very, very well on the daily chart because I know the strongest structure in the market is the daily chart. 4 hour, 1 hour, 30 minutes, no. 4 hour is better, but all these other ones, I do not touch them. I will never touch them. I will never trade them unless I'm doing it for fun or I'm scalping or doing it on a small balance of an account. But really, really, if you have money, the daily chart is your bread and butter. So I'm gonna explain my concept as I explained is what? Sell high and buy low. Now the question is that how do you know how high something is? How do you know that something is very high and it's bound to fall no matter what? That's what I'm going to be explaining. How do you know that something is very low and is bound to rise? That is what I'll be explaining to you. That is what I'll be explaining to you. So This is how it goes. I'm gonna start here. Today, as you can see, the market is on, it's moving right now. And this is a US dollar South African rand. This US dollar South African rand is very low. It has reached its lowest point. I'm going to explain everything. And this is one of the trades. Of course, there's an arrow here and it's okay. This is one of the trades I'm looking for. The whole of January, this thing is going to go up. Into February, I guarantee you, it's going to move up into February. And if you have money, you are going to make a lot of money, no doubt. So this is what I do. These are my rules. You can see this is the stochastic. It's a MBFX timing indicator. So there are levels here. There's the 70 to 100 level and there's the 30 to 0 level. So the 70 to 100 level, this is the overbought region. And the 30 to 0 level, this is the oversold region. This region is the overbought region, meaning price is exhausted and it is bound to fall no matter what. That's what it means. Price is exhausted and it is bound to fall no matter what. This is the oversold. If price is below, if the stochastic is below 30 and going towards 0, it means price is oversold and it is bound to what? To rise no matter what. So this is what I do. So I'll just zoom out a bit. I want to explain something to you here. So if you can see this chart, let's just okay. Let me divide this into Control Y. Okay, I love this. I'm dividing into like months. Yeah. Each box is like 1 month. Yeah. Each box is like, yeah, 1 month. Each box is like 1 month. So this is what I'm doing. So, like what I can do, I can give an example from, let's say August. Let's just start with the USD ZAR from August. I want to show you the type of trades I could have taken. This is August. Let's go to August. Let me just do this. This is August. So what happened in August is that I saw the market moving down. This is how I trade. The market was moving down. So when the market was moving down, I did not enter. I don't like entering something which is already gone, which has already moved. I like entering my trades at the beginning of trends, at the starting of trends. So I usually look for a trend, first of all. That's my thing. I usually look for a trend which is already in progress. So it was a downtrend like I saw, a very smooth one. So what I did is that I was waiting for this downtrend to die. That's what I was waiting for, this downtrend to die. I was waiting. I was in the waiting period all these days. If there are other currencies that are in good states, I can trade them. But for this one, I did not trade this one. I was waiting to buy this market. I knew that after falling, there will be buying pressure which is going to come in. So my intention was to enter at the right moment for me to go in with the buyers. That was my intention. So now I want to show you something on the stochastic. Like we saw price falling. From this day, we saw price was falling, going towards our 30. Let's move now. We move. On this candle, price had entered, the stochastic had entered the 30 mark. So for someone, he'll easily say, no, this price is oversold because it has touched the 30. But that's not how I do it. These are Ikinashi candles. That's why I like them. I do not enter the market based on the fact that it is in the oversold zone. It's not enough for price to be in the oversold zone for you to buy it. You have to wait for certain conditions to be met. You don't just buy something because it has crossed the 30 or below the 30. I usually tell people that price can stay in the oversold zone. It can stay in the oversold zone for a long time. It doesn't mean when price enters the oversold, it means it's reversing immediately. Like you see here, it did not reverse, it did not go up. It's not enough. So I have to wait. Price entered below 30. It started going lower, lower, but still the candles were still red. These are not normal candles, they are Ikinashi. On normal candles, it will be everywhere. They'll be down, up, so you won't be able to know what really is happening. But I like the Aiki because they smoothen out. They allow me not to enter any fake moves. So all this time, I'll be holding, holding, holding. I will not be trading this trend. I'll be waiting for the buyers to come in. So here are my rules. As you can see, price now is showing signs of reversal. Like it changed, the stochastic changed from yellow to green. Usually when it changes to green, it's a sign that no, the price is about to change direction, but it's not yet time for you to enter. It doesn't mean the price has changed. I always wait for the right opportunity. So to make things easy, what I do is that when price is in the oversold zone, I wait for it to come and cross the 30 mark again. That is my first rule. First of all, if it enters below the 30 zone, no matter how many days it takes in here, I wait out. I wait for it to come back and cross my 30. So when did it cross? As we can see here on this white candle, which is signifying that the buyers are coming in. It signifies that the sellers are now dead and the buyers are coming in. But again, for me, before I pick trades, I usually look at where the reversal point happened. I look at support and resistance. Usually what I do, I zoom out. Like I put a line here to see previously, is it a point where price reversed really? So I zoom out. I like zooming out. So I'll zoom out. We'll come to this point. So I was able to check that, okay, previously this point was close, yeah? Price reversed, but it didn't touch. But previously I can see touches here. 1, 2, 3 reversal points here. Price reversed at this point. So this point is a strong area. If I can zoom out, I can see again it came here and reversed a bit. Here I can see it broke through. So what I do is that if price could have broken through here, I knew that it could have gone to these levels before reversing. So what I do is that I already measure that price is here. But if price continues in the oversold and breaks through here, continues in red, it is likely to go here at this mark. It's likely to go here before it reverses. But what happened is that here, it went here, which is also a strong point. And then what happened? It reversed. And when it reversed, I'm very confident because I look at the candles. If the candles show me that this thing is really now reversed, that's when I enter. I'm not very quick to enter. So I know a full reversal, what it means. What a full reversal means is this. These are my rules for a full reversal. And I will show you this. Agree we are here. Price did not break through to go to the previous. Agree we saw the previous support and resistance. Price did not break through to go there. But what I usually wait for is that price, of course, it has to cross the 30. From down, it has to cross the 30. That's number one. Number two, I have to see 2 daily white candles, Aikinashi. This one, as you can see, it's like a what you call, is it a doji or whatever? This one here is signifying that the trend is about to change. But what I want is I want a closed candle, a white one, a closed body candle to form and finish for the day. That's what I look at. When a candle like this forms and finishes for the day, I wait for the next day, which one is this one. If the next day shows me that there's too much momentum still going upwards, that is when I enter. First of all, I look for the first candle to form, which is a closed candle, which signifies to me that the buyers are coming in. Then I wait for the next day candle to open. When this candle opens, and then I see that during the whole day, it's still showing momentum of pushing up. Usually, like I can even look on the 1 hour chart to see what's happening on this specific day, on the second day. If an uptrend begins on this day and it's showing that it's going to move up, that's when I enter my trade on the daily chart, which could have been done somewhere here. So I could have bought the market here. So now, as we can see, I could have bought the market here, which is practically here on this day, somewhere here. And you can see the stochastic was now hitting the 50. It had crossed the 30 and it was already on the 50, which is a very good indication. When the market reverses and the stochastic is touching the 50, it's a very good reversal because it's gonna go no matter what. It's gonna go your direction. So I entered here to what? To buy the market. Now you'd ask me, how do you exit the market? It's very simple. I usually exit the market based on the candles, the Aiki candles. I don't exit the market based on the stochastic or anything. I exit the market based on the candles. When I see, when I see, okay, hold on, my brother just entered the room. I want him to go out because he's disturbing me. Gaston, go out. I'm doing something important. I'll call you. Go, close the door. Thank you. And that was my brother. I was telling him to leave the room. So what I'm saying is that for me to exit the market, I usually hold the market for as long as I can. But when I see an opposing red candle, Aikinashi candle, the opposing candle, it has to be a closed one also. And it has to be significant. This one was not significant. This is the fakey candle. Of course, it's not closed. It has a small wick here and here. This one, I skipped it. It was a fake. I did not close my position here. I closed my position here, where the day ended. Here, here, here. I usually close my position. It has to be a closed candle. Closed mean closed here, not 2 weeks candle like these candles. 1 week, 1 week down, 1 week, 1 week up. No, I need a closed candle like this one, closed and going down. So when this candle closed for the day, that's when I close my position. Now, how many pips did I earn from here to here? If we calculate the number of pips from here to here, that's 638 pips. 638 pips. Now, this 638 pips, really, if I was using two lots, let me just say two lots, 638 pips times two lots is $20 per pip. That's $12,760 in how many days? $12,760 in this saying 20 candles is 20 days. Let me see. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. Yeah, 20 days. This is 20 days. 20 days. I could have earned 638 pips in 20 days. On a two lot, I could have earned 12,760. Let's say I'm using 5 lots, which is $50 per pip times 338. Right? That's $31,900 on a 5 lot. $31,900 easily on a 5 lot. Now, what I want to show you is this, like, okay, I've been showing you my entries and how I enter the market. But you would ask me that, what if a trade were to go against you? Really, to be honest with you, using this entry technique and using the daily chart, using oversold and overbought and support and resistance, using these techniques, to be honest with you, trades don't go against me. But I always tell people the best quality of a good trader is not how they manage their winning trades. No, it's how they manage their losing trades. How do you manage your losing trade? So many people are using stop losses. I don't use stop losses. I hedge my positions, especially on the daily chart. I do what I call hedging. So this is what I do. And this thing, it will help you to take out all the fear. It will help you to take out all the fear in trading. It will really help you. It will help you. It will help you. It will help you. Okay, there was just a problem there, but let me continue. Okay, I'm back. I just had a problem in the house. So what I was saying is that the most important quality of a trader is not how you manage your winning trades, but how you manage your losing trades. So usually what I do is this. What I'm gonna teach you, I call it, it's a hedging strategy, but it's a very simple hedging strategy that I use in order for me to win any trade that I'm inside. Any trade that I have taken, I usually do this. When I decide to buy a currency like I did here, I'll measure a distance from my buy. I'll do a sell stop. So it depends on how much I'm willing to lose temporarily. So for example, if my distance, okay, 200, okay, if my distance is 200 pips, let me see here, okay, about 200. If my distance from my entry is 200 pips, because you know the USDs moves a lot, that's why I'm saying 200 pips. If it's 200 pips, I usually calculate how much I'm willing to lose temporarily. So if I'm using two lots, which is $20 per pip, it's $20 times 200 pips. This is $4,000. So depending on the size of the account I have, if losing $4,000 temporarily is not a problem, maybe let's say I have an account with $15,000 or over $10,000 or $20,000, I'm able to risk like that. Losing $4,000 temporarily is not a problem because I know in the long run I'm going to make a lot of money, whereby this thing will become nothing else, will become nothing. So I already know that, okay, from my entry, if market really from my entry, because the buyers are now in, sometimes it's very impossible for market to change like that, especially when you're entering at the lowest or highest points, like where I entered here. If market decided to go against me by any means, going back to this area, it could have activated my sell stop, which is also equivalent to the two lots that I used to buy. So my sell stop will be two lots sell. It will be a two lot sell. So when this is activated, when market goes down like this, it will be like a tug of war. The only amount that I'll be losing temporarily will be $4,000. So no matter how much the market drops beyond this, no matter how much it falls beyond this, I'll not be losing anything more than what? $4,000. Now, here is where the work in trading comes in. This never happens. According to my practices, it has rarely happened because now I know how to pick the good trades. But if this happened by any means, what happens is that if it activates my sell stop, I allow it to pass. Usually, I like even moving to the smaller time frames. Let me just locate, okay, this part on the 4 hour. Let me locate this part on the 4 hour. Where is it? Okay, okay, here it is. Okay. Ash. I moved this here. Okay, let me just see something. Ash. Okay, this is where we entered here. Let me go to the 4 hour and look at that part. Okay, here. Okay. So now when we see, as we can see, we entered here. This is a 4 hour, but you can see there's a spike here. Market dropped about 60 something pips, which was nothing. Our entry was already good. Our hedging distance is 200 pips below, which is here. So from where we entered, you see the market just decided to go up. This is a 4 hour chart. But let's say market came down to here and activated this part. So I could have been in a hedge trade and I could have been losing minus $4,000 if I traded with 2 lots. So let me go to the daily so that we can see what I do. So this is what I do. If market were to activate the sell stop, it would pass. So I'll move to the smaller time frame so that I can observe it very closely. When this passes, I observe it because this sell stop, it's a defensive mechanism. I'm not going to make money from the sell. My intention is to make money from my initial trade, which is a buy, because I know my buy is well analyzed and eventually the market is going to go my way. I usually know when I enter that eventually the market is going to go my way. So what I do is this. When the market passes my sell stop and my sell is activated and my sell is now becoming profitable, I now observe it. Sometimes I cannot even sleep. It just depends on what is happening. If the market now comes back, I make sure I put a break even stop loss on the sell stop. If the market comes back, it will pass, it will break even and pass. When it passes this sell stop, agree now it means it's going towards my initial buy. When it passes like this, I reinstate back the sell stop where it was, so that when market passes then decides to go back again, it will still defend me. And I will do that until I win this trade. I will do that until I win this trade. So usually if it can happen that it activates, then it comes back, breaks even and passes, I will reinstate back the sell stop here. Then when it passes, it will go back to my initial entry. Then my initial entry will start making profit. It will be like this sell stop was never activated. So this sell stop, its job is to protect me temporarily. It's not like a stop loss whereby it goes against me and I'm saying, no, okay, I'll lose $4,000. It's fine. No, I don't want to lose and I hate losing. So I defend myself temporarily. And then when it comes back, I make sure this one breaks even and passes. Then I put it back again. And when it passes, usually it will just go up and up towards the first entry. Then it will just go up now. So usually it doesn't happen this way, but I usually enter my trades with confidence because I know how much I'm risking when I enter. And I know no matter what, I'm going to win the trade. That is my rule. That is my motto. No matter what, I have to win the trade. So this sell stop is just for defense. It's just for defense. Like I want to give you an example. Because really, to be honest with you, for me to really show you more is when I meet you. If you can invite me to Games and I sit down with you, really, that's when I'll show you more. Because this is a video right now and really there's no, it's going to be a long video and there's no time. But what I want to show you is the way I pick trades. Like I'm going to show you a trade which I was in recently. Like let me show you here. Let me show you. This happened recently. It was in October. The USD was pushing up. So it reached this point. You can see this point. This is a point of indecision. As you can see, the market here is trying to decide where to go. It's trying to decide where to go. There's what we call consolidation. Yeah, consolidation is happening here. But if I can measure for you, when the market was in this place, right? If we can see the candles, the stochastic was going up. So you can see when did it touch the 70 mark? On this candle, it had touched the 70 mark, which is our overbought region. But it's not enough for you to sell immediately here. Like I told you, you do not sell because price touches the 70. Price can stay in the overbought zone for a long time. What happened? It stayed there. There was no change of candle color. It stayed there. So what do? I wait for it first to come back and cross the what? 70. That's my first indication that price wants to go down. It has to come out from the overbought and cross the what? The 70. If it's in the oversold, it has to come from the oversold and cross the what? Cross the 30. That's my first indication. That's why I am very patient. But we can see price here. Price here started coming down, as we can see. There was consolidation. This candle, it made the price cross the 70. But I told you my rules are not saying it when it crosses the 70 or crosses the 30, I enter immediately. No, I still wait. My next indication I told you is the candles. I look at the candles. I have to see one closed Aiki candle. Then I have to observe the second candle for the day. If the second candle for the day shows momentum to the downside, that's when I enter my sell. But looking at this point, like here, I've drawn a line here. This point, let us look at this point. Is it a potential reversal point for the price? So I zoom out. I zoom out. What do I see? When price was in this area, it was near this area where it reversed. There are many points below it where it reversed. So now let's go to the points which are touching actually. This point here is where price reversed previously, right? So we have one point here. But if we look above, there are three stronger points which are here. You see here, here it failed here. How many times? 1, 2, 3, about 4 times it failed to break this area. So above where price was on this day, I checked, there was only one zone where it touched. Then I looked above, I saw that there are 3 points. So what I told myself is that if price can break through here, it will obviously go towards these strong points. And then when it reaches here, I knew that it was gonna fall. I knew that because I had looked. I saw there are 3 points because if there are more points, the stronger the resistance or support. So here I looked, there was only 1 point, and these ones were below. So I told myself that price might not reverse here immediately. It might push again up and reverse maybe. Now, originally, I was looking at these 3 points. So what did I do? How did I survive this trade? I survived this trade because of my rules of patience. This part was at a point, of course, where price can reverse, looking at the previous support and resistance. But on top of that, here you saw there were 3 more points where price reversed. So those 3 more points were stronger for me than this area. But this area could have been an area where price could have reversed, but my conditions were not met because why? I had one closed candle which formed and closed for the day. When the next one opened, it did not really open down. It opened somewhere up here. And for me, this candle, it showed much of a push to the upside for that day. It did not show push to the downside. So I did not enter this trade because I need to have 2 significant candles showing me that the sellers are in. So this one, I skipped it. What happened? The market now rallied more up. So I skipped this and the market continued moving up. So when the market reached this point, I now checked. It was still in the overbought. You can see, you can call this divergence because you say, oh, this point is higher than this point. But when you look at the candles, this point is higher than this point automatically. You can say this is divergence. But what I'm talking about is this. It's not a matter of this one being higher there for it to be higher on the candles. No. This is a momentum indicator. It's a stochastic. It does not really show you what to do. It indicates to you what might happen. So you can see this part is higher than this part, but it doesn't mean when this part is higher than this part, it means the price of this part was higher than this part. You can see the price where this is higher than where the price was here. So this, you can call it divergence. That's what they call it. They call it divergence, but it's nothing. As we can see, the price is still above the 70, which says the price is overbought. So the price rallied to a point of support and resistance, which was very strong. So what was I waiting for? I was waiting for the price to come again and cross the 70. So it came and crossed here. It crossed the 70. This was a doji candle, but I wanted a closed candle. I got this candle first of all, which was an indication that the market is going to go down. I had to wait for the next day's candle, which came. It was a closed candle and it was showing momentum to the downside. So I could have entered this market somewhere here to sell it here. I could have sold this market somewhere here. Now, how do I exit this market? This was an opportunity for November going into December, mid-November. How do I exit this market? The way I exit, I told you I have to see an opposing white candle, a closed one, not a fake one. I know fake candles, and market makers are always using them to make people go out of trades, to make people panic. But I will hold the trade until it gives me a sign that this trend is dead, it's finished. So I saw the market here. As the market moved down, we saw this candle for this day. It was a white candle, but why is it not significant? It had 2 wicks, one here, one up here, and this candle it closed down here for the day. It don't close up there. It spiked up there, but it came down and closed somewhere here. So we see the next day's candle. There's no significant white candle for me to come out of this trade. So from my entry, on top, I already have a distance of hedging. If I sell this market, I'll have a buy stop, which is a defined period. It might be 200 pips, depending on your account size. It's something that we are willing to lose temporarily. But we know that our entry is very perfect. No matter what can happen, this trade will still win it at the end of the day because we are patient and we are looking at targeting big money. So this trade, I could have held it, not closed it yet. You see what happened? They faked us out, but the market continued going down. We had another fake candle, 2 wicks, one up, one down, a white one, fake. We had another fake candle, 1 week, one up, one down, fake candle. This was not, it's not any time for me to come out. Fake again. This is not a closed candle. Fake. So what happened? All these things are happening on the small time frames. The market moves in a wave. So the market is going up and down, but the market will go eventually where it wants to go. And I love the Aiki Nashi candles because they allow me to stay into a trade and hold it until I maximize my profits. Normal candles would have confused me by this time. By this time, they would have confused me because I would have been thinking, no, the market wants to reverse what. But because of this Aiki Nashi, I'm able to detect when the market really wants to change. And I usually look at the significance of the candle which is forming. So I held this market, held it up to now. If you traded this, you would be holding this market until you see a significant closed candle, a white candle opposing this, a daily candle. That's when you would close it. But let me just shock you. The market right now is here, right? The market right now is here. So what has the Aiki Nashi helped me to do? The Aiki Nashi has helped me to stay into the trade for long. I was not deceived by what is happening on the small time frames. I was not deceived by the market makers, whatever they are doing. Whatever they are doing, news, whatever is happening, I was not deceived. My technical analysis was very strong. So from where I entered the market, which is here, to where the market is right now, this is 1,915 pips in 32 days. 1,915 pips, 32 days. Now, if we take 1,900 pips, right? And let's say we're trading 2 lots, right? That's times $20 per pip. That's $38,000. In 35 days, you'll be holding this trade with a profit of $38,000. You seeing that profit of $38,000, but you'll be holding this trade. But now look at this. This trade is exhausted. Now I want to talk about the opportunity for January into February. This is the opportunity on the USD ZAR, and it's a guaranteed opportunity. Why am I saying that? First of all, the USD ZAR right now, as I'm talking, it's in the oversold zone. When it crosses the 30, it will be the first indication to buy it. But I'll have to look at the candles. Remember my rules? It will be the first indication to buy it when it crosses the 30. Why am I buying it? A trader is someone who should tell you the reason why they are buying or selling. There have to be more than one reason why they are buying or selling. These are my reasons. Number one, it is oversold. So when it's oversold, it's bound to go up. I want to buy low. My rules and sell high. So now it's very low, so I want to buy it, but it's not yet time. First rule, it will have to cross my 30. That's the first rule. It's not saying I'll buy it when it crosses the 30. No, I'll not buy it by then. What's the second rule? I usually zoom out like I told you. When I zoom out, this is where the currency is right now. Let me look back. Previously, I see this point is very strong. Price reversed from this point. How many pips did it reverse from this point? If you can say price moved about 1,500 pips upwards from this point. Upward. Upward. Let me just shake that point. Let me just shake that point. This is the point here. From here, price moved the number 1, 2, 3, 4, 5, 6, 7, 8, 9. In 10 days, you can see sometimes it can just take 10 days, not even 20 days. Price moved about 1,100 pips. 1,100 pips. Let me zoom out. So here I've already determined that this is a strong resistant area. So price is going to go up for the whole of January into February. This USD is going to move up. It's very low. You see, it's a very strong area. Very, very strong area. That's number one. Very strong support and resistant area. Number two, it's oversold. The trend has to change. That is all I need. Of course, we have an arrow, which is another plus. Yeah, everywhere there's an arrow, you'll find that eventually price went that way. That's how this system is. So right now the price is here. So what am I waiting for? I am waiting for a white significant candle. First of all, a closed one. A closed one to form. Then if one forms which is white, even if it's not closed, but if it's big enough and it forms, I'll wait for the next day's candle. If the next day's candle is white and it shows signs of moving up, that's when I will buy this currency. And by then, I believe it will be the stochastic will be, I think, around 50. It will be hitting the 50 mark. So I'm waiting for the candles to show me all the conditions are met. The price has touched the channel surfer dynamic support and resistance. It has touched the horizontal. Is it vertical or horizontal? Yeah, I think vertical. It has touched the vertical support and resistance. So price is bound to go up no matter what. No matter what. So when I enter a buy trade here, I'm going to enter a sell stop, which is a hedge, which will just be for protection in case, but I know it doesn't happen. I'm just saying that it gives you assurance that no matter what, you're going to save this trade, you're going to win this trade. So I'm going to put a sell stop at a measured distance. If it's 200 pips, it's 200 pips. You can put it at 150 pips. Doesn't matter. Whatever you want to put it at, it's up to you. It depends on your account size. So this is a trade I want to tell you that we are going to be buying the USD ZAR. And when we buy the USD ZAR, USD ZAR is gonna move about 1,300 pips. It's gonna move a lot. And we are gonna hold this for all of January. We are gonna hold this trade until we get an opposing seller's candle. A significant opposing one. Not the ones which come in between, maybe they have 2 weeks, one day, one way. Those ones are just to scare us. We will still hold this trade and benefit maximally from it. Benefit maximally from it. So what I want to show you that the USD ZAR is a trade that's gonna be mature maybe by next week. It's a buy that we are gonna do, and we are gonna do our hedging in place, knowing that no matter what, we're gonna make money out of this trade. And I guarantee you, are gonna make money out of this trade. Trust me. Another one I want to show you is the gold. Let me go to the daily chart. Let me load my indicator. There we go. I want to show you about the gold. You see, here is the gold. This was December. It was coming from a good trend, a downtrend. But I told you, what was I waiting for? I was waiting for a change in direction. I received this white candle, then I received what? A closed one, right? After receiving a close down, I waited for the next day to see what's going to happen, but I still saw momentum to the upside. There was momentum to the upside, so I was in here, bought this market, and been holding this market up to now. I hold markets until I see. You see, it went up to how many pips? It went up to 668 pips in 10 days. But right now, it's showing signs of reversal. But I'll only exit this market when I see an opposing red candle closing for the day. Those are my rules. So if I earn 500 pips or so from this trade, it's still fine. But what I want to show is that this one right now, it's extremely overbought. So I'm waiting for it to come and cross the 70. When it crosses the 70, I will look at the candles. If I see a red one, I see the next day one is still red and pushing down. This is a sell for January into February. And there's an arrow already, as we can see, but we are going to sell gold US dollar. We want to enter at the start of the selling trend. We're going to sell it and it's going to fall. It's going to fall. And why am I qualifying this trade? If we see where it was and we zoom out, right, we are going to see there are 2 points closer to it where price fell massively, right? And there's a point here where price again fell massively. So beyond this point, there are 3 points, 1, 2, 3, where if price breaks this point, it might go there and then eventually fall. But price is here. It hasn't broken through. If price shows all the signs of reversal, if all my conditions are met for a reversal to happen here, this price is going to fall just like it fell here. It's going to fall again. It's going to go down. So I'm like, this one, we're going to sell it because it hasn't broken through to these levels. It's already showing signs of reversal right now as we are talking. It's already showing signs of reversal, but the signs are not yet mature. As you can see, the price is here. They are not yet mature. So this is the game of patience only. The market is very predictable. This is a trade that we're going to do also for January. The USD is a trade that we are going to do a buy for January. Other currencies, I don't think that they are in opportunities yet. Let me check the USDJPY. USDJPY, you see there's nothing. There's no trend which has been coming or prevailing trend. There's no prevailing trend. There's no opportunity on the USDJPY. There's no opportunity. GBP USD, let me go to the daily chart and check it out. Daily chart, let me load it. Okay. On the GBP, there was too much consolidation here, but I believe now we're going to have a downtrend. Why am I saying that? It's not my best opportunity, but I know it's going to work out. Why? It's at an area of support and resistance where market fell. It went there, fell to 4, went there again. This is like a M formation. It's going to come down. It's like a double top. It's going to come down. If it crosses my 70 and gives me all the conditions of the candles, it's going to fall down. It's going to come again to these areas. So this one is going to fall also from into January, maybe into February or just January. It's going to maximize its falling in January. This one. So we've got the GBP USD daily chart, which we can have a trade holding. We have the USD ZAR, a buy, which we can hold a trade on. We have the gold XAUSD, which we can sell for the whole of January. I'll check other currencies, but I want to pick the best. So in a nutshell, this is the strategy I use. I buy low, I sell high, but my rules allow me to have a lot of winning trades. They allow me to trade very, very well. And this is the secret of the daily chart. This is what I do. And I know and I guarantee you, even all these trades that I've been talking about, they're going to make you money. And what keeps you in a trade is what? The high Kinashi candles. They allow you to stay in a trade and avoid all fake outs. They allow you to stay in a trade and avoid all fake outs. That's what these candles do. That's what these candles do. That's what I wanted to show you, but I really want to meet you and sit down with you in person because I couldn't explain everything in this video. But this is what I have. So God bless you. And if I sit down with you, I'll be able to explain really more for you to understand better. But it's very easy, like you heard me. God bless you for giving me such an opportunity. And I really pray to God that I'm privileged to work with you because I believe I have the ability to make a lot of money. Even using your own personal account, we can make a lot of money with what I have. And I guarantee you. And I'm very confident because every time I enter a trade, I have no fear in me because I know no matter what, I have the skill to serve any condition. That's why I've developed a hedging strategy, which is very simple, which people don't know about, which is very simple. Of course, when it happens, yeah, I cannot sleep because I have to make sure that sell stop or buy stop, it breaks even no matter what. And then price continues where it was meant to go. But it rarely happens. It rarely happens because I always enter when the opposing trend has died completely. When I know it is dead, it is no more. That's when I put my entry. But I put my entry on the starts of trends, beginning of new trends. That's what I do. So thank you very much and God bless you.